Namaste, my dear friends. In the earlier session, we referred by discussing elaboratively the concept of valuation rules. We highlighted with regard to rule number 28, wherein corporate guarantee, rule number 28, sub rule number 2, which is amended provision. If corporate guarantee comes into picture, the valuation is 1% of the guarantee amount or the actual consideration given by the company to the person who provided the guarantee. Whichever is higher is the value of supply. That only apply in case of corporate guarantee. Personal guarantee of a director of the company not taxable because as per the RBI norms it is not provide for consideration. Therefore, there is no consideration, there won't be any GST. Clarification given by the CBSE in this regard. Ex-director provide corporate guarantee to the company on his personal capacity. For that consideration will attract the GST. Valuation 1% of guaranteed amount or actual consideration paid to that corporate particular ex-director by the corporate company, whichever is higher is the value of supply. And also we highlighted rule number 29, transaction between principal and agent. The valuation is open market value. If not, at the option of the supplier, 90% of the value at which the recipient supplied to the buyer. Like that we referred. And also we referred rule number 32, sub number 2 with regard to money exchanger. Prior to that we too referred the rule number 31 capital A lottery for which valuation. Rule number 31 capital B OIDR services, not OIDR services, sir. This is called as the what we called online money gaming services. Rule number 31 capital B. From 1st October 2023 onwards, valuation, the bet amount itself is the value of supply. Rule number 31 capital B, online money gaming. Rule number 31 capital C, casinos, valuation, the bet amount is equal to value of supply. And also we referred rule number 32 sub number 2 where the clause A, clause B regarding money exchanger valuation. Of course, we referred rule number 32 sub rule number 3 air travel agent valuation. 5% of the domestic fare is value of taxable supply. In case of international fare, 10% of the international fare is equal to value of taxable supply on which you pay the GST at your option. Rule number 32 sub number 4 also we referred, namely called as life insurance company offers risk plus saving. In that case, what is the valuation where the saving amount is clearly intimated by the policy, namely the insurance company to the policy holders, then the premium deduct the saving amount, the balance only taxable supply. If not able to intimate it, in that case, 25% of the premium amount is equal to value of taxable supply for the first year. For the subsequent year onwards, 12.5% of the value of the premium is value of taxable supply. In case of single annuity premium, 10% of the premium amount is equal to value of taxable supply. Like that, Up to this, in the last class we referred. Now referring to you furthermore the points here as follows. Rule number 32, sub rule number 5. Basically, it is one way or the other called as margin method. We used to call it as a margin method. You know margin, nothing but sale minus purchases. If it is positive value, then on that positive value pay the GST. If it is negative value, then no GST. Provided this is applicable only for a person who buy and sell used goods, namely second-hand goods. I have registered under GST law. My nature of business is I used to buy used goods and I used to sell that used goods after doing some value addition thereon. That's it, nothing else. In such case, I have two options. Sir, I am not willing to avail input tax credit, sir. At the same time, some of my purchases not qualify for input tax credit, sir. Since I am buying the goods from an individual who is basically an initial person, sir. So question of input tax credit, there is no GST liability at all, sir. So like that, I am buying goods. In that case, where there is no input tax credit at all, and there is no much credit for my books of accounts, in that case, I am not willing to avail the input tax credit. Then margin method is quite suitable for you, where sales minus your purchases, the balance amount if positive figure on which you pay the GST, if negative figure, ignore the GST, not required to charge GST for a transaction. But you should not avail the input tax credit. That is a prima facie one of the condition. Sir, I want to claim input tax credit, sir. I am dealing with the buying and selling of second-hand goods, sir, but I want to claim input tax credit, sir. Then forget about margin method. Not a compulsion on you. This margin method is up to you to decide. It is left to you to tax planning. Left to you to tax planning. Sir, so far so good, sir. How to understand this, sir? Practically simple. The practically I am going to bring one example to your notice is as follows from our workbook. Many of them opted to have the workbook and they paid the fees. I am highly thankful, my dear friends. For the workbook, those who are opted, I will definitely send. It's going to finalize it. I have to review it because the entire job of my books, Mr. Rafi only will do. Data entry, editing, reviewing, finalizing, everything. Loop and corner of my book is with my knowledge only. I am not going to be assigned to any others. You do this part, balance I will do, I won't do. I will see with my conscious knowledge which is correct or not. Bit to bit I refer, and once I finally feel comfortable, then only it goes to print. Definitely I am going to send the book maybe in 3 or 4 days. Once I send the book to your door delivery, I will also share the particular consignment numbers also. So don't worry at all about your payment and the book. It is my responsibility. Now please come back. Those who paid the fees for that. Referring further here, one of the important problem with regard to margin method. For each and every provision, I have the numeric application, including latest amended provisions, even corporate guarantee, one problem. I myself will write the problem. Being an author of 20 years experience, I'm proud to say that we own created problems and available in the study material also, which appeared in the examination. But I'm not going to much claim, see, this is my problem, from my book came. It is the act which I have taken and simplified. I have not written the act. That's why I'm not going to claim much. But my workbook containing latest problems with the latest amended provisions, including corporate guarantee problems, followed by online money gaming valuation problems. Thereafter, the what we can call, so far we discussed the similar line of business input tax kit available by the transportation of passenger services, renting of motor cab services, like that. All latest provisions, amended provisions, how should understand? By reading is okay, but when application comes into picture, some slight difference. In the last class we referred lottery tickets, where lottery is supplied or sold concept came. I have clarified to you by inviting offline tickets and online tickets. This is also a problem long back was appeared in the RTP of CF final. And earlier, my dear friends, I would like to share with important issue. 2 years before, this is 22, 21 window, in that period, Corona period, that time, Institute uploaded in their website question answers practice manual. How many of you are aware that do not know? Excellent manner they have been prepared the volume, questions and answers. Each chapter wise, they have constructed the problems and solutions. Your faculty, like a watchdog, extracted that entire content from the institute. How suitable for our examination? When I look into that, excellent manner they drafted the problems. That also incorporated in our workbook. But unfortunate, today such question answer volume not there in the website. Why not there? I feel that updation is required. 2021, in that Finance Act, they have been prepared that. After that, there are so many changes has been came, and each time when changes takes place, answers to the some extent also will change. Reason, some additions of exemptions, some deletion of exemptions. When I prepared the exemption problem, one of the point that time was exempted. After that, the exemption withdrawn. Then I have to go to the problem and amend the problem also according to the new requirement. That is not taking place, seems to be. Because I feel personally there was a problem for me also. My workbook, I released it. When I released it, before Corona, I released it. Edition 1, first edition. Now, there is almost 21. 2021, I released it. Now, 2024 only I am releasing for publication purpose. Reason, it needs more labor from every attempt to attempt should look and revise it. But anyhow, but I'm telling you, my dear sir, the source of my workbook, the workbook what I'm referring is highly reliable source. And second one, highly useful. To say that point, I have given this particular backup from where I received this particular content, how I updated. I should share with you, you should come to know. Now referring to your problem from margin method. Ram and Company being a car dealer dealing in second-hand cars. Ram and Company purchases used car from Mr. Raja and sell the very same car to Miss Rani after water wash and painting. The purchase price is 2 lakh rupees, whereas the sale price is rupees 2 lakh 50,000. Find the GST liability as per rule number 32 sub number 5 of the CGST rules by following the margin scheme in the hands of Ram and Associates, Ram and Company. Assume applicable rate of GST 28%. Ram and Company is not availing the input tax credit on purchase of the second-hand cars. Whether your answer is different if the sale of the second-hand car for rupees 1,80,000. Note, Ram and Company and Miss Rani are located in the same state of Tamil Nadu. What an excellent problem it is. Here, margin method they are asking. And also they said they are not availing, Ram and Company not availing input tax credit. So in that case, my dear sir, what is my sale price? 2,50,000. What is my purchase price? 2 lakhs. Sales minus purchases. So positive margin. How much I got margin? Simple to say. 50,000 margin. In that case, CGST 14%, because 28% means 14% CGST, 14% SGST. CGST, again SGST. How much will come, my dear friends? 7,000 and 7,000. Very good. If the sale price is 1,80,000 and my purchase price remains 2 lakhs, my margin is there in second case? Yes. Margin is what I can say that 0. Yes, you are right. 0 or less. That means what? Negative. In that case, the law here says no GST. A simplified lollipop problem. Further, a uniqueness it has. That's why I am bringing notice to analyze it. Now, how many of them will answer this correctly? Let us see. On the face of it, by the time of completion of reading, I want the answer from your side. Mr. D, being a dealer in goods, sells new brand car for 11 lakh rupees. He advertises that customer can sell their old car if they buy new car from him. One customer exchanged his old car for 2 lakh rupees. D sold new car to that customer for 9 lakh rupees. The Central Tax Department demanded to pay the GST on 11 lakh, whereas Mr. D argues that he is eligible to pay GST on the difference, namely margin of rupees 9 lakhs. Difference, namely margin of 9 lakhs as per the rule number 32 sub number 5 of the CGST rules. Discuss and decide the correct approach. He says that margin only I will pay because 11 lakh my value and exchange value is 2 lakh rupees, balance is 9 lakhs on which I will pay the GST. So margin method is 9 lakhs. Margin method only I will apply, says the client, namely the taxpayer. Department, no, you have to pay on 11 lakh rupees GST. Who is right? Department rate or the taxpayer rate? Department is right. Yes. No. What is the answer said to me? First tell me. Who is right? Who is right? Department is right. Why department? Answer correct. You are right. But the started to be explanation which I have not digest. Get my point, my dear friend. Your answer right, Amma, but the presentation is slightly deviating. Why it is a department right? Start now, speak. No, 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 no. Please, do not dilute the right route. You started to go to other than the right route. The right point here is simple. If you say I should accept, you have to say department is right, sir, because margin method is applicable only for used goods, second hand goods. Since here he is not dealing with the used goods, therefore margin method not applicable. Sufficient. ఆన్సర్ సొన్నాల్ నెత్తడి అడిగను ఆన్సర్ చెప్తే అట్లా నిలబడిపోవాలి. If you say answer, you should surrender. That's sir, you are right, sir. The explanation is important. Come back. That's why I have taken the step in our multiple choice question case scenarios. What a great manner the CA Institute prepared the case scenarios, sir. By reading, I should appreciate the person who wrote that particular or contributed his knowledge to prepare the case scenarios. Multiple choice questions, your 30 marks is there, no, my dear. MCQs, mind blowing. That content is available in the Institute website also. There are multiple choice questions and case scenario multiple choice questions. Put together more than 100. Sometimes you will get the answer A, B, C, D, one answer. But how to arrive that answer? What is the reason behind that which is missing in the institute material? The reasons, that computations, that working, that background which I am providing in the workbook of mine in the case scenarios, each and every multiple choice question, A, B, C, D. Right answer is A. Why it is AI? How it is arrived? Small working. That gives us the self preparation by reading the material. My contribution to you is a helping tool, but you have to involve more to acquire the knowledge. Self reading and understanding, exploiting the content in our site. Because of this reason, that reason, okay, fine, this got it, very good. Like that, you have to be contribute. I'm a facilitator, as a faculty, as a friend, but your contribution is utmost important to reach the goals. Now, please come back. In the given case, margin method not applicable since the Mr. D is not a dealer of used goods. One more point I am bringing. These are conceptual points. Hopefully, my beloved friends will answer this correctly in the given case of example, this given example. Why I concentrating more on rule number 32, sub number 5 means there may be expectation in the coming examination from this area. At the same time, it has the conceptual understanding, a uniqueness application. Margin method to pay the GST is available? Yes, available. And rule number 32, sub number 5, only applicable for supply of goods, that to used goods. This margin method not applicable to supplier of services. Referring further, my dear sir. Example here. This example I am referring, Mrs. X Limited, a registered person under the GST, being a dealer dealing with the second-hand goods. Mrs. X Limited supplies a used camera to a customer in Chennai for selling price of rupees 15,000. The used camera, second-hand, was purchased for 10,000 from a registered dealer in Mumbai, on which CGST, SGST 1,400 each was charged. GST rate applicable to the camera is 28%. X Limited charged IGST 28% and interstate supply. find the net GST liability in the following independent cases. If input tax credit availed, if the input tax credit not availed. Input tax credit availed means margin method not applicable. What is the selling price? Sale value. Therefore, output tax. Output tax IGST 28% on 15,000 is equal to how much comes? 28% is come again, bro. 4,200. Very good. Less input tax credit availing. What is amount? 10,000. 10,000. Yeah, that's what 28%. Correct only. Which is how much comes? 2,800. Which I say that you rightly said 1,400 and 1,400 is the way in which I am deducting, and the balance net outflow. Net 1,400. Net liability will be paid by electronic cash ledger. Very good. Over. Now coming to the point of input tax credit not availed. Now I want the margin directly. Margin 5,000 one answer. Any other answer? Margin when I have not availed input tax credit margin method. Somebody said 5,000 is one answer. Any other answer? How to apply, my dear? You are CA finalist na, or you may be some qualified also. I do not know. There are 2 or 3 taken the admission in this batch, qualified CS. One from Hyderabad, one from Cochin. My students, I'm very much proud. Qualified chart students are attending my class. In your batch, they are sitting. But you have to speak. Say correctly. Apply application. My dear, 5,000 is not the correct answer. Reason, when the X Limited purchased the goods, from whom he purchased? From a registered person. Who charged the GST? Na? This is a GST charge. Na? This GST paid and purchased, no? Which is not available in the input tax credit, then the GST paid on inward supply will form part of dash cost. Therefore, my cost is not so longer 10,000. My cost of purchase is how much? 12,800. Try to understand. So my cost of purchase here with the GST 12,800. 10,000 plus GST. My sale value 15,000. When I am not availing the input tax credit, my inward supply on which the GST is a form part of my cost of purchases. This point I referred in the last class also. Isn't it? So now tell me how much margin? 2,200. Very good. So on which IGST 28%. So my IGST amount is equal to is how much? 616 is the answer. In the given case is the answer. The solution is given. See, first case 1,400 net liability. You rightly identified, simplified minus told. Then coming to second part. Second part you see. There, this particular workbook is a helping tool for us. I said GST will form part of the cost. Now please come back, my dear friends. Rule number 32, Sub-rule number 2, also one of the helping tool for a banking company NBFC also. Generally, the financial institutions is to provide what we can call it as a loan for acquiring the assets, especially corporate companies receiving the loan from the bank, buying the plant and machinery, which is hypothecation. We call hypothecation. If you go to any client place center, you come across when the plant and machinery is there, in front of that particular premises, plant and machinery is hypothecated with State Bank of India. For example, I'm telling you, it means State Bank of India given the loan to that plant and machinery, where the person who received the loan should repay periodically the principal and interest. If the person defaulted to repay the loan, the banker has the right to repossess that particular plant and machinery. In that case, what is going to happen? Banker acquire the used goods, and what the banker will do with that goods? He will come for auction to dispose of that goods. To the highest bidder, they will dispose of. That means seller. So banker acquired used goods and selling used goods. On such plant and machinery repossessed by the banker, availing of input tax credit does not arise. Then only the margin method is the source for the banker to derive the margin. If positive, pay the GST on such margin. If negative, ignore it. Here I am bringing to your notice what is the purchase price of the banker when he repossesses the goods. Purchase price of the default borrower is the purchase price to the banker after reducing 5% per quarter, part of the quarter also full quarter, from the date of purchase till the date of disposal. Date of purchase visualization, not the date of purchase of the defaulting borrower. Date of acquired, repossessed by the banker is the date of purchase, because I am talking about to levy the margin on which GST in the hands of the banker. Purchase price of the defaulting borrower is the purchase price of the banker after reducing 5% per quarter from the date of purchase till the date of disposal. That means that should not go and refer what is the date of purchase by the defaulting borrower. Do not look. The date of acquisition, date of repossession by the banker from the date of acquisition to disposal by the banker is the time period to be referred. Is a conceptual application. This too I too confirmed with the experts in this regard. There are pitamahas in the indirect taxes. My dear friends, how to understand this? Simple application from our workbook. Referring here, this particular one as example. Mr. C has taken a loan from the bank on 15th July 2017 worth 2 crore and purchased a machine. Subsequently, Mr. C defaulted in paying the loan amount along with the interest. Subsequently, the bank repossessed the machine from C on 1st Jan 2018 The banker sells the said goods on 26th April 2018. Find the value of taxable supply of goods in the hands of the banker in the following two independent cases. Case 1, machine sold for 1 crore 90 lakhs. Case 2, machine sold for 1 crore 70 lakhs. Note, applicable rate of GST, namely IGST, take as 18%. Very good. Now, in the given case, I should know cost of acquisition to the banker, namely cost of purchases. In the given case, what about here the purchase 2 crores, purchase for 2 crores by the Mr. C, defaulting borrower. So, take that as a 2 crores here, 2 crores. From that, deduct 5% per quarter for number of quarters from the date of acquisition by the banker from a defaulting borrower. When they did so, 1st January and disposal of April. For that's what I'm telling you, ma. What you quarter is April, May, June, or January, February, March is a quarter. Now here, 1 quarter, January, February, March, and 2nd quarter, only 26 days. Even 1 day is 1 quarter. April, May, June. So there are 2 quarters. So 2, which is straight line method, 10% reduction, namely 20 lakhs. Balance amount will come here, cost of acquisition as 1 crore 80 lakhs. Yes. In that case, first case they are selling at 1 crore 90 lakhs. If so, my purchase cost 1 crore 80 lakhs. Margin in first case 10 lakhs. On which GST 18%. On which GST 18%. First case IGST 1,80,000 is a solution. Second case comes into picture. My selling price 1 crore 70 lakhs. My cost of acquisition 1 crore 80 lakhs. Margin is negative, no margin. Therefore, no GST. Yeah, in the second case, no GST is the way in which you have to identify the solution for the given application numerics. Now, please come back to my dear friends. With regard to rule number 32, sub number 6, redeemable vouchers. In the case of voucher is issued to redeem against any product or service. In that case, actual date of redemption is the time of supply. That time, what is the value of a voucher is redeeming is the value of supply. As simple as voucher value 2000, but I'm redeeming only for 1200, valuation for 1200 only for the voucher. If not redeemed, no time of supply, no value of supply. The other one here, value of service provided by one distinct person to another distinct person. Rule number 32, sub number 7. How to arrive the valuation? Valuation. Distinct person means head office or branch office. Transactions. How to arrive the value? It is not to all type of distinct persons. They said class of persons. They said between distinct persons. That means to say that here they said class of service provider. Such class of service providers. If they notify in the notification upon the recommendation of the GST Council, we will adapt it. Accordingly, we proceed it. Otherwise, no. It is notify. If notify, we will bring the notice from time to time. Otherwise, nothing. This rule is there, long back is introduced, but made so far not effective. They have not notified anything here. And as per rule number 32.7, the valuation is as follows. I have not said. If they said, we'll bring in down the line. Further made effects. Rule number 33. Value of supply of services in case of pure agent. When we talk about pure agent expenditure, should not be added in the value of supply. Pure agent expenditure. Simplify manner I will tell you. You hopefully understand this. Sir, when you say supplier of service, let us say Mr. P of Pune, who is a registered person, my dear sir, under GST law. Now, this supplier supplying services. What type of service supplying? Let us say C&F. C&F services supplied to Mrs. X Limited, who is also a registered person in Pune. While providing C&F services, carriage and freight services, when providing, Mr. P of Pune paid import duty of rupees 2 lakh on behalf of Mrs. X Limited. Actually, when he went to clear the goods from the customs, Department of Customs said, hey Mr. C&F agent, Mr. P of Pune, import is X Limited. They are liable to pay 2 lakh rupees import duty. Who will pay? Mr. P of Pune said, I will pay, sir, because he is my client only. He appointed me as a C&F agent. Then the amount paid 2 lakh rupees to department by Mr. P of Pune while providing his output supply of services to the X Limited and clear that cargo from the customs, safely delivered to X Limited. Very good. So far, so good. Now, in the given scenario, what happened? Mr. particular P of Pune wanted to raise his value of supplies. So here, value of bill, how much bill value he is bringing here means, see, his C&F charges, C&F charges rupees 20,000 plus reimbursement import duty, which is 2 lakhs, total 2 lakh 20,000. Now, if there is a case, on what value Mr. P should pay GST? Here, rule number 33 talks about pure agent. If supplier provides the services and incur the expenditure acting as a pure agent, if so, such pure agent expenditure should not be form part of the value of supply. What do you mean by pure agent expenditure? Pure agent expenditure means the supplier not enjoying the benefit out of the expenditure, nor the supplier is going to be own the title on the expenditure. Is a purest form of the expenditure of the recipient of service, whether the supplier provide the services or not provide the services, the expenditure supposed to be paid by the recipient. Such expenditure of the recipient is discharged by the supplier on behalf of the recipient is called as pure agent expenditure. Now you tell me, my dear friends, when X Limited imported the goods, who liable to pay import duty? Importer liable to pay. Whether P of Pune provide C&F agent services or not provide the C&F agent services, the liability to pay the import duty on the head of the recipient. It is recipient expenditure, which is incurred by the supplier while providing output supply, acting as a pure agent expenditure. If so, rule number 33 says that it is not addable in the value of supply. So, from the given information and explanation, what is the pure agent expenditure? Can you able to identify the value of pure agent expenditure? Soluno, Chappali Melu, 2 lakhs. Excellent. Hats up the answer. Import duty 2 lakhs. It is nothing but pure agent expenditure. Resultantly, value of supply, value of taxable supply in the given case is rupees 20,000 only, not the 2,20,000. Good. Now I will ask you one more point here. Be careful and apply. Don't forget, you are listening to the Rafi sir classes. Keep in that mind, answer to this particular given question. Presenting here one example. Here, let us say Mr. CA Ram, who is a practicing chartered accountant, registered person in Chennai. Now, my dear, you tell me in the given case, if he went all the way to client location, Mrs. D Limited of New Delhi. Here, supplied tax consultant services. Now, this supplier of this particular services wanted to raise here, this fellow want to raise his bill for the service rendered. 1. Taxation charges 1 lakh. Let us say further reimbursement expenditure, air travel to and fro 20,000, accommodation 1,80,000. Then income tax paid to department 5 lakhs. Total bill value 8 lakhs. If so, can you identify what are the expenditure as a pure agent expenditure. 5 lakhs only pure agent expenditure, anything other than this? 5 lakhs pure agent expenditure. Perfectly correct. Pure agent. Therefore, excluded from the value of supply. Very good. What about air travel expenditure reimbursing? What about accommodations is reimbursing? Now, if you refer in the Income Tax Act, when the actual reimbursement or the reimbursement expenditure which is shown separately in the invoice, then in that case, the recipient of that services should not deduct the TDS on actual reimbursement expenditure. You are aware of that. Actual reimbursement expenditure shown separately in the invoice should not be subject to TDS under section 194J of the Income Tax Act, with which you already familiarized. But in the given case, what happened? Under GST law, this air travel expenditure, accommodation expenditure, what he is recovering from client is not a pure agent expenditure. Though that air travel expenditure, accommodation services not subject to TDS under the Income Tax Act. So what? Under the GST law, these two expenditures, air travel expenditure, short-term accommodation expenditure, reimbursing from the client by supplier cannot be called as a pure agent expenditure. Reason, it is his input supply of services to provide the output supply. His input supply to provide the output supply. My dear sir, whether eat or not is up to you. Whether you stay in the short-term accommodation by spending 1,80,000, or you can stay in the lodge, or you can go and stay in the relative, is up to you. So this is not the expenditure of the recipient which you discharge. It is your expenditure you discharge. That means your inward supply to provide your output supply. Resultantly, the value of supply in the given case is total value of this, which is equal to 2 lakh rupees. Is called as taxable supply. Pure agent is not a taxable supply. Got the clarity, my dear sir? Pure agent expenditure, not a taxable supply. Now coming to the point. If I bring a particular numeric, a RTP question, are able to answer? Hopefully you will answer this. Bringing to a notice from our workbook, pure agent expenditure. An excellent problem it is. Now referring here this, my dear sir. Example, reading as follows. Roly-Poly Manufacturers Limited, registered in Mumbai, Maharashtra, is a manufacturer of footwear. It imports footwear making machine from USA. Roly-Poly Manufacturers Limited avails the services of Rudra Logistics, a licensed customs broker with its office at Ahmedabad, Gujarat. In meeting all the legal formalities for getting the said machine cleared from the customs station, Roly-Poly Manufacturers Limited also authorizes Rudra Logistics to incur on its behalf the expenses in relation to clearances of the imported machine from the customs station and bringing the same to its warehouse at Mumbai. These expenses would be reimbursed by Roly-Poly Manufacturers Limited to Rudra Logistics on actual basis. In addition, Roly-Poly Manufacturers Limited will also pay the agency charges to Rudra Logistics for the said services rendered by it. Rudra Logistics raised an invoice in the month of July, which is as follows. Agency charges 5 lakh rupees, unloading of machine at Kandla Port, Gujarat 50,000, charges for transport of machine from Kandla Port, Gujarat to Rudra Logistics go down in Ahmedabad, Gujarat 25,000, charges for transport of the machine from Rudra Logistics Ahmedabad go down to the warehouse of Roly-Poly Export Import House in Mumbai, Maharashtra 28,000, custom duty on machine 5 lakh, dock dues 50,000, port charges 50,000, hotel expenditure 45,000, traveling expenditure 50,000, telephone expenditure 2,000. Here they said the value given here values exclusive of the GST wherever applicable. Compute the value of supply made by Rudra Logistics with the help of given information. Would your answer be different if Rudra Logistics charges rupees 13 lakh rupees as a lump sum consideration for the clearance of the imported machine from the custom station and bringing the same to the warehouse of Roly-Poly Manufacturers Limited? In the given case, Rudra Logistics is our client providing clearing and forwarding services to Roly-Poly, and Rudra Logistics raised the invoice with all expenditure incurred by him and what is the value of supply in the hands of Rudra Logistics, where they very clearly said, Roly-Poly clearly said that, hey Rudra Logistics, you please incur some of the expenditure which we supposed to incur, but I am requesting you incur and I will reimburse to you on actual basis. Rudra Logistics says, yes sir, I will do for you. Accordingly, the following information given here. One by one we analyze and you have to answer. Sir, agency charges is a form part of the value of supply? Yes or no? Addable?
Yes, sir.
Yes, addable. Great. Great. Like that I want voice. Good mic system. Because it's all recording, my dear. And your friends who are going to listen the lectures, that time they also come to know what doubts the students are asking, their friends are asking, they should know. So good mic system, please have to have. You acquire it. It is our investment, not expenditure. Then unloading of machine at Kandla Port, Gujarat. Unloading the machine, loading the machine, transporting the machine, delivering the machine. This all expenditure. Here, it look like no confusion. Sir, it is an expenditure of the supplier, no, to provide the output supply. But here very clearly they said, look here, Roly-Poly also authorizes Rudra Logistics to incur on its behalf. That is the point to note, key point. On its behalf. Who has to incur the expenditure? Roly-Poly, recipient of service. They authorizes supplier, Rudra Logistics. You incur, I will pay to you on actual basis. That means Rudra Logistics incurring the expenditure on behalf of their recipient, absolutely a pure agent expenditure. Then in that case, loading, unloading of the machine at Kandla port is the expenditure of the Roly-Poly, recipient of service, but incurred by the supplier. Therefore, it is called as pure agent expenditure. Therefore, not addable. Further, charges for transport of the machine from Kandla Port, Gujarat to Rudra Logistics go down in Ahmedabad, Gujarat. Obviously, it is the expenditure of Roly-Poly, but incurred by the Rudra Logistics on behalf of them and reimbursing on actual basis. resultantly not addable. Charges for transport of the machine from Rudra Logistics Ahmedabad go down to the warehouse of Roly Poly Export Import House of Mumbai. So this also be expenditure of the recipient incurred by the supplier. Therefore, not addable. It's a pure agent expenditure. Custom duty, undoubtedly pure agent expenditure, not addable. Dock dues, who has to pay? The port dues. The supplier, the recipient has to pay, namely importer has to pay, recipient, but incurred by supplier. Therefore, it is also be called as the pure agent expenditure. Port charges, handling charges, absolutely is a importer liable to pay, namely recipient liable to pay, but supplier paid and reimbursing is also pure expenditure, not addable. Hotel expenditure, it cannot be a pure agent expenditure. It is not a pure agent expenditure. Hotel expenditure. Who's yes, value add in value of supply. Excellent, good. So 40,000 is the input supply of the supplier. Therefore, add from part. Traveling expenditure to provide the output supply. Yes, value of supply addable. Yes, of rupees 50,000. There you are. Telephone charges to, yes, it is an inward supply to provide the output supply. Therefore, 2,000. Then the value of supply here, how much? Huh? 5 lakh? 5 lakh? 93 or 92 amma? Huh? 97 amma? Well, 45 very good, very good. I have mentioned only 40,000. It should be 45,000. Yes, yes. Then it is 95 lakh 97,000. Very good. Perfectly correct. Is a value of taxable supply. Value of taxable supply in the hands of Rudra Logistics. Liable to pay GST on this value. Now, coming to second part of the problem. They said, sir, Rudra Logistics agreed. Why roly poly you bothered about the expenditure? You leave it to me. I will do the service for you. Machine is imported by you, came to India. Okay, I will clear and deliver to you. Lump sum consideration, no breakup. Pay 13 lakhs to me. I will do the service for you. You least bother about that expenditure. I will take everything. Safely I will deliver. Then this is also one of the agreement. If that agreement taking place between the Rudra Logistics and Roly Poly, then Rudra Logistics charging how much? Lump sum consideration of 13 lakhs, which has no breakup. In that case, the law of the land here says that value itself valuation, namely the value of supply itself 13 lakhs. If that is the case, taxable value no, my students are speaking with me. No, my students, my beloved friends are speaking with me, my dear. Doubt? No, no doubt. Tell me, brother. Tell me, interact with me, just like live, no. See, my one of friend here says, somebody asking the doubt. You are asking doubt, please ask me doubt. Any doubt? What is the value of supply? Tell me. In the given case, taxable value of supply. 13 lakhs. On which liable to pay GST by the Rudra Logistics, namely supply. Now got the clarity? Any doubt in the given case? Yes. Now please come back. After having this particular rule number 33 conceptual understanding, and now I am bringing to notice one circular of the CBIC here. What is given in the material on the screen is a circular of the CBIC. If you refer, my dear sir, This is Mumbai International Airport, which is operating by Mumbai International Airport Limited. Is a airport operator. See, so beautiful. An excellent manner has been. The moment you entered into the Mumbai International Airport, especially, you feel like a 7-star hotel. Centralized AC, hot water, drinking water, cool water, normal water, excellent restrooms, hygienic manner maintained, and for our passengers, there are prayer halls. Yes, and there are comfortable chairs to sit. These are the services who offered to whom? Airport operator is offering to passengers. As a result, airport operator wanted to collect passenger user fees. Passenger service fees want to collect by airport operator. It is difficult for the airport operator to have a counter and whoever coming inside collecting the passenger service fees or user development fees, we call it. Therefore, air travel operator said, hey, airport operator said, air travel operators, passengers coming to my airport because of you are providing transportation passenger services. Anyhow, you are selling the tickets to the passengers and collecting the fees. Along with your air travel ticket, please collect my passenger service fee, also called user development fees. You please collect and pay to me. Per passenger you collect 200 rupees towards passenger service fee and pay to me, said by airport operator. In our given example, Mumbai International Airport Limited, to air travel operators. Who are they? SpiceJet, Indigo, so on. This air travel operator said, definitely I will do for you, sir. We will sell the tickets to the customers. Along with that, we are also collecting separately passenger service fee and we will remit to you on actual basis. Now, SpiceJet collected the passenger service fee, rupees 200, collecting from passengers and paying to them. And along with that, they are also charging the airfare, rupees 10,000. Total collecting is 10,200. In that, this 200 is paying to airport operator. Now in that case, SpiceJet asking you, Mr. CA, please tell me what I am collecting from my passenger, rupees 200, is supposed to be collected by airport operator. On behalf of airport operator, I am collecting it and paying to them on actual basis. If so, is it value of supply in my hands? Mr. CA, you please tell me, is addable in the hands of the air travel operator? Absolutely not. It is a pure agent expenditure. Therefore, not addable. What is the value of tax supply? Only airfare is the taxable supply in the hands of air travel operators. Very good. Collecting and paying on actual basis. Therefore, is the air travel operator not liable to pay on user fees, passenger fees, any GST. Very good. But who collected it? Air travel operator collecting from passenger, routing through air travel operators. Now, airport operator receives the consideration or not? How much he receives the consideration? Consideration is rupees 200, on which air travel operator liable to pay GST, which is inclusive basis liable to pay GST. What is the amount of GST liable to pay here? GST. Here I will say that GST inclusive basis. Therefore, here 200 multiplied by 18% divided by 100 plus 18 is taxable in the hands of a travel operator. How much comes here? Quickly tell me. 30.50, so 31 rupees. GST liable to pay by airport operator. Now, coming to air travel operator. Air travel operator says, hey, airport operator, for you, we are doing the service, collecting from our passengers rupees 200 in the name of passenger service fee, and we are safely, that amount we are giving to you. That means we are doing the service for you or not. For that service charges, we are going to charge. Can you able to pay or not? Mumbai International Airport operator said, why not? What is your service charges? Sir, for doing such services, we will charge rupees 20 per ticket. Rupees 20. That means this air travel operator charging service charges of rupees 20 per ticket, where supplier of service SpiceJet, recipient of service airport operator, which will attract the GST or not? Absolutely attract GST. On 20 rupees at the rate of 18% GST will apply in the hands of air travel operator. How much comes? Rupees? That is 4 rupees per ticket. Means per collection of rupees 200, charges of 20 rupees. Is a supply of service by air travel operator to airport operator. Supplier of service, air travel operator. Recipient of service, airport operator. So air travel operator SpiceJet, airport operator here is Mumbai International Airport Limited. So is the way in which the taxation takes place, set by CBIC. Coming to the rule number 34, my dear friends. Rule number 34 talks about rate of exchange of currency for determination of value in the case where when you import goods, namely online money gaming, import of goods. Am I right? Yes. If that is the case, what is the exchange rate? Because the amount in denominated foreign currency. Who liable to pay GST? Online money gaming wala only liable to pay GST as a forward charge, not a reverse charge, even though online money gaming goods imported. Now, that is in foreign currency. Convert to Indian rupees. In that case, exchange rate of the CBIC at the time of submission of shipping, that means submission of a bill of entry in the office of customs. Now the question here is, sir, where is the question of bill of entry submission by the importer when you import online money gaming from a person from outside India? There is no bill of entry. It's online money gaming. So I simply to say that as of now, exchange rate referred by the CBIC is relevant. Exchange rate notified by the CBIC is relevant. Submission of bill of entry for import of online money gaming goods does not arise, and moreover, Department of Customs has no right to levy the custom duty. As you are aware of that, na? IGST only will be levied by the Department of GST for online money gaming imports. Exchange rate of the CBIC is relevant. Coming to import of services. In case of import of services, the Department of Customs has no right to levy any duty of customs. In case of import of services, the importer who import these services, value of service imported by him is denominated in the foreign currency, should convert in Indian rupees to pay the IGST by recipient, especially RCM apply cases. Obviously, import of services means, as we understood, section 2, subsection 11, which is nothing but location of supplier of service outside India, location of recipient of service in India, and the place of supply also in India. In that case, import of services, the recipient liable to pay GST. If the transaction is a B2B transaction, in that case, importer should pay IGST, but value of service in foreign currency converted to Indian rupees. Which exchange rate? The exchange rate here suggested under rule number 34 is generally accepted accounting principle, GAAP. GAAP is not written somewhere like account standard, sorry. Generally accepted accounting principle means at arm's length price. The price is prevalent at the time of import, which one can able to consider as a reasonable price only. Today, if I say $1 equal to 70 rupees, reasonably correct. It may be plus or minus 10% acceptable. If I say dollar rate today on what we call 15th February 2024, dollar rate, US dollar rate per USD Indian rupees only 7 rupees. If I say, can you accept? Sir, what is this, sir? It is almost touching 100 rupees, sir. You will say or not? So like that, what is relevance at the time of import? At arm's length price, at fair market value, as open market value. It is called as generally accepted accounting principle. According to that, GAAP exchange rate you considered and multiply with the number of units of the foreign currency of import of services, you will get Indian rupees value of import of services, on which you apply the GST to pay the GST in Indian rupees to Government of India. Further, my dear friends, rule number 35 of the GST rules, value of supply, where GST not shown separately, but the value is taxable supply. The value is taxable, but the GST not shown separately in the invoice. In that case, that is called as gross value. In that case, the GST can be computed inclusive basis. Well allowed practice set by the Supreme Court of India in the case of Maruti Udyog Limited long back itself, well before the introduction of the GST law itself. The same has been endorsed by the GST Council by giving the due respect to the Supreme Court of India, and they made a rule itself. Rule number 35, if the value of supply where it is taxable supply, the GST not shown separately in the invoice, the value is inclusive basis by the GST. Well accepted practice, but the recipient of the bill or goods or services not eligible to avail input tax credit because it is not a tax bill. It is not a tax bill. Unless there is a tax invoice, you can't avail the input tax credit as per section 16 of the CGST. Tax invoice should be must, where the tax shown separately should be there to avail the input tax credit. In the given case, you are paying the GST inclusive basis, there won't be any input tax credit. This is what I said. No, I said here one particular place here. In the given case, I told you GST inclusive basis, and no one will get the 31 rupees as input tax credit. Is a department revenue directly. So inclusive basis allowed practice set by the CBIC, and it is there in the legal backup manner, rule number 35. Rule number 35, legal backup, yes, because it is supported by section 15 subsection 4 of the CGST Act. All these rules have legal backup. With this, I can say that, my dear friends, the valuation chapter is concluded for your batch.